Elon Musk has always, both raised caution and sort of pushed the boundaries of AI forward in his work. So he's spoken out a number of times about how we should be careful. He even said that he could potentially launch a ChatGPT competitor at some point. So I guess I'm not surprised to hear the concerns, but in this case. Again, I think for Tesla in particular, the opportunity is really in robotaxi. And we're actually seeing early signs that autonomous driving is already safer than humans. So at Tesla's Investor Day, they released the accident rate per million miles driven in the full self-driving beta software for the first time. If you adjust that rate for city streets, because up until the most recent release, that's really where the FSD beta software worked, is on city streets. It would suggest that a Tesla in FSD is roughly 5 times safer than a Tesla driven by.
Get ready to buckle up as we explore ARK's visionary projections, decipher Tesla's strategic moves, and paint a picture of what lies beyond the horizon for this trailblazing company. Today, we're venturing into uncharted territory as we unravel the mysterious dance between autonomous vehicles and the financial landscape. So grab your virtual steering wheels and join us on this thrilling journey into the heart of innovation. But before we get any deeper, if you haven't already, make sure to like and subscribe to our channel. Greetings and welcome to Tesla Stock News. Get comfortable, as this ride is going to be thrilling. Recently, ARK Invest released their most recent study report for 2024, which is jam-packed with creative ideas. Similar to past years, one noteworthy aspect is the revolutionary effect of robot taxis on transportation, which raises the possibility that Tesla may control the industry. This paper investigates the potential intersection between Tesla's Optimus business model and robotic taxis, offering an exciting new development in the industry. Imagine how autonomous ride-hailing could transform point-to-point transportation. Transportation. Travel back in time to 1871, when horse-drawn carriages cost a whopping $1.70 a mile. Fast forward to the 1934 post-Model T era, when the price dropped to a meager 7 cents per mile. But here's the kicker. Ever since then, the price has plateaued at 70 cents per mile for an extended period of time. ARK Invest sees a revolution in the works. By 2030, the cost of transportation could be reduced to as little as 25 cents per mile thanks to the combination of electric and robot taxis. This is quite ambitious, but even if it takes a little longer, say until 2035, the impact will be monumental as we're talking about having our lifetime transportation expenses paid for in just a few years. Let's talk numbers. Currently, the annualized rate of robot taxi passenger trips is around 2 million, spread across about 20 cities. This is impressive, but it's a small amount of the trillions of miles driven annually, so it's not even close to that amount. Look to the left, and you'll see Bo leading the pack in China with 1.5 to 1.6 million miles, followed by Whale with approximately 0.5 million miles. But here's the twist. Autonomous miles run rate, this isn't your average taxi ride. Instead, it's miles driven autonomously using Tesla's full self-driving option. And guess who's going to be driving ahead? Tesla, with an astounding 710 to 720 million miles driven autonomously annually. Tesla will have a significant advantage if they can successfully implement autonomous robot taxi services, but doing so will require overcoming technological and regulatory obstacles. Currently, data from ARK shows that Tesla, when operating under full self-driving and human supervision, offers a significantly safer option than other vehicles on the road. Ahead of their impending shutdown, cars like Cruise barely traveled 43,000 miles before incidents, mostly on surface roadways. While limited to specific places, Tesla boasts safety statistics more than twice as high as the national average for human drivers, performing noticeably better, especially on highways where there is less of a complicated driving environment. Human-driven, although Teslas with safety features also perform better than other cars and even pay more, the most startling statistic is that the company's fully autonomous driving on surface streets averages 3.2 million miles per crash, a startling 16 times safer than the national average. This confirms Tesla's standing as the safest alternative for driving, particularly when safety is the first priority. Also, switching to electric and driverless vehicles has the potential to save about 10,000 lives yearly in the U.S. In a breakthrough for 2024, alone by 2030 resolving the serious health problems posed by gas emissions from conventional automobiles, Massive language models and generative AI are ready to boost robotics developments. The model that stands out in this instance is Eureka, denoted by the purple bar. It is able to perform jobs with little manual input and without the need for previous examples on the spectrum of activities displayed on the right. In several areas, Eureka performs as well as or better than humans. This represents a huge advancement, showing that robotics and modern technologies can do duties just as well as, if not better than, human movers. Concentrate. Let's go back to a slide from last year's Big Ideas. According to this prediction, autonomous ride-hailing could create a staggering $1 trillion market in transportation by reducing the cost per mile of switching from owning a personal vehicle to an affordable autonomous ride-hailing service. This could lead to a skyrocketing increase in utilization. Rockets. The graph shows how the part of profits in this industry, as the graph shows, will go to the person who drives the first 50% of ride-hailing cars in cities, who will make almost 80% of the P with its broad fleet manufacturing capabilities and upcoming, reasonably priced, robot taxi-ready vehicles. Tesla is ideally positioned to lead this critical stage. Securing a sizable slice of this first market share might allow Tesla to access roughly 80% of the revenue pool, leaving latecomers with a negligible portion of the proceeds. Tesla has an advantage because it was the pioneer in the autonomous vehicle market and has superior manufacturing skills in addition to advanced hardware and software built into their cars. Switching gears to the impact on the auto loan sector, Tesla stands out in the field while competitors like BYD thrive in mass production but fall behind in autonomous software development. The news is alarming for established automakers. The graph shows the increasing rates of default on both prime and subprime auto loans, signaling an impending crisis. According to ARC's rights-based study, as the manufacturing of electric vehicles doubles, costs are expected to drop by between 24 and 28%. This continuous trend of cost reduction for EVs might seriously devalue gas-powered cars, hence risking the $1.6 trillion in auto loans associated with them. Due to the quick depreciation of gas-powered cars and the rise in interest rates, financial institutions such as banks and the finance divisions of legacy automotive dealers are exposed to significant risks. They fail to make loan payments, costing lenders money. Looking ahead, this upheaval presents a serious challenge to the financial infrastructure supporting the auto sector. As the landscape changes, ARC predicts that autonomous platform providers could generate an astounding $28 trillion in enterprise value by 2030. This prediction has implications not only for Tesla's vehicles but also for initiatives like the Tesla bot. Therefore, Tesla must adjust its strategy in order to take advantage of this enormous potential for autonomous platform providers. When it comes to navigating Tesla's future and its potential, it's important to grasp the magnitude of $28 trillion, which is roughly 9 times the combined revenue of all auto manufacturers in 2023. Our friends at Seeking Alpha also share this optimism. When it comes to Tesla's impressive growth, it's not just about watching from the sidelines for Tesla bulls and those with a keen eye for finding the next stock market gem. Seeking Alpha is your one-stop shop for the most recent Tesla information. Targets for Tesla stock price innovation from Tesla and everything Musk Elon. One of the strongest sources of pro-Tesla news online is Seeking Alpha. It cuts through the mainstream media's anti-Tesla rhetoric to present the facts. For a unique discount, click the description's link. When we go ahead to 2030, a lot changes. We're talking about makers of autonomous electric vehicles. A new participant in the mix is fleet owners and developing autonomous platform providers. The revenue distribution is remarkable given that producers of autonomous electric vehicles are expected to bring in over $900 billion. Fleet owners may make $3.2 trillion, but autonomous platform providers are the real stars here. They stand to make an incredible $3.8 trillion in revenue, but it's not just about revenue. Enterprise values also matter, and in this regard, autonomous platform providers outperform the competition by a wide margin. With enterprise values approaching $28.1 trillion, they eclipse the rest by a considerable margin for a company the size of Tesla. Selling electric cars isn't where the real money is, it's in establishing a strong force as a standalone platform supplier. It is likely that Tesla will create and run its own fleet of autonomous cars in order to avoid having to split earnings with other companies. This action puts Tesla in a position to become a major player in the autonomous car market, especially in the West. Furthermore, Tesla's potential. Beyond automobiles, Ventures like humanoid bots might become the company's primary focus instead of selling in order to maximize revenue streams. In other words, Tesla might become a one-stop platform provider, leasing everything from autonomous vehicles to humanoid bots. This revolutionary change is expected to result in exponential growth, raising Tesla's value to previously unheard of levels. It is imperative that we have in mind the $28.1 trillion figure as we navigate this disruptive terrain. Given Tesla's trajectory, it appears possible that ride-hailing services that funnel customers in place of outright car purchases will become more prevalent in the Tesla stock news, and give this one a thumbs up. Thank you for watching, and see you in the next one.